Hi everyone and welcome back. So today I want to talk about 3 cannabis accounting don'ts. As in, don't do this if you own a cannabis business, right? Now there are more than 3, but I just picked the 3 that stood out to me the most for one reason or another. All right, so let's start with number 1. As a cannabis accountant, or rather, as a cannabis business, you do not, or rather, please do not attempt to do your own bookkeeping. And the reason why I say this is because cannabis accounting is extremely complicated. And there are so many rules and regulations behind cannabis accounting, whether it be on a federal level or on a state level. Now, if you don't have a background in accounting, okay, I suggest that you do not attempt to do your own bookkeeping. In addition, if you don't understand 280E, and I mean fully understand the requirements of 280E, in addition to that, fully understanding the requirements of the IRS code 471, which has to do with cost of goods sold, you definitely don't want to mess around with your own bookkeeping, because cost of goods sold is an area that can get really messy. And if you ever get audited by the IRS, one of the things that they're going to be looking at and paying special attention to is to see whether or not you try to somehow circumvent 280E, which means you try to get around it, or if you have put things or hidden transactions in cost of goods sold that need not be there. Now, sometimes it may not necessarily mean that you're trying to circumvent or intentionally trying to trick, the IRS, or trying to go in and play with the numbers. The fact of the matter is, if you don't understand accounting, if you're not familiar with double entry bookkeeping, if you're not familiar with 280E or 471, you may just unintentionally record transactions in a way that are incorrect. And the IRS definitely has the cannabis businesses on their radar as it relates to auditing. So it's not even a matter of will I get audited? It's a matter of when will I get audited, whether that be by the IRS or by the state. Also, because of the amounts of regulations behind the cannabis industry, a lot of times, even on a state level, there are certain reports that the bankers need to see. There are reports that your vendors may want to see. There are reports that other third parties may want to take a look at. And these reports have to be properly put together. And if you're not an accountant and you don't understand accounting, I can almost guarantee you that you're not doing a proper job. And also, another reason why you don't want to do your own accounting is because eventually, when we the accountants come in and take a look at your books and maybe have to do your tax return or whatever we have to do, 9 times out of 10, we have to go back and redo everything that you did, because it is not going to be correct. And I do understand that you have some software companies that say, oh, you can do everything by yourself. It's all easy. Just press this button over here and you're good to go. That's not the case. You have to have an accounting background in order to be able to do accounting, period. But it's even more important when you are in the cannabis space. Okay, so that's number 1. Number 2, do not trust that your seed to sale software is syncing perfectly with your POS system. So what is seed to sale? So seed to sale is an inventory software that pretty much tracks a plant from the beginning throughout the entire life cycle of that plant until the plant is actually sold at a dispensary. So your seed to sale system has to sync up or has to mirror your POS system, meaning that the sales that show within the reports of your seed to sale system have to mirror the POS system. Otherwise, it's a problem. Now, there are instances where some dispensary owners might think that their seed to sale system is properly synced up to their POS system, but that is not always the case. And even if it is syncing, a lot of times it doesn't sync properly and there are errors. So it's important that you do not depend on the systems syncing up and providing you with proper reports. So you want to make sure you have some sort of control in place to check, whether it be on a daily basis, which might be overkill, maybe on a weekly basis, or just set up a system, a consistent system to compare your seed to sale system to your POS and make sure those numbers are matching. Okay. And the third and final thing is, do not try coming up with creative solutions around 280E. I have heard it all, where people have said, "Oh, we can circumvent 280E by doing ABC." ABC as in let's create 1,000 entities and let's start running let's run the income or run our transactions through these different entities, and because that particular entity happens not to be in a cannabis space, so to speak, we can take expenses on that level. But it doesn't really work that way, because at the end of the day, what the IRS is looking for is form over substance, or rather substance over form. They're looking at substance over form. So what that means is, yes, you may decide to create 3 or 4 different levels of entities and think that you can somehow circumvent 280E. But when the IRS is looking at your business structure, they want to see, okay, you have this 4th entity over here that you're saying has nothing to do with cannabis. However, this entity as a standalone has no other form of income, it has no activity. So everything that is running through this particular entity is coming from the cannabis business. Therefore, it is part of the cannabis business, and therefore it is also subject to 280E. So that's one way people try to circumvent 280E, is by creating all these different layers of entities, which gets really confusing. And in addition to that, you have some people that may create a tiny corner in their store and say, okay, we're going to sell merchandise over here. We're going to sell just maybe t-shirts over here at this small square footage space. We'll just sell t-shirts. And because of that portion of our business happens not to be part of trafficking. Therefore, we're going to take these expenses based upon that little area that we sell non-cannabis type products. Well, that doesn't work either. It doesn't work either, because the majority of your business is selling or trafficking in marijuana and cannabis, and a tiny portion happens to be something outside of that. But then you take a boatload of expenses against the fact that you have a business that happens not to be a cannabis business. Yeah, that's not going to work either. If you ever get audited, the IRS, they're going to see right through that, and they're going to go in and recategorize everything. All right, so those are the three cannabis accounting don'ts. Now, like I said, there are plenty more out there, so maybe I'll come back with some additional ones. But in the meantime, that's all I have for you, and I'll see you next time.